Hey Kevin, this is for Wednesday, April 17th. This is an S&P chart. I'm not fully, well, I am prepared for this video. I just don't have all the numbers updated, but I can do that as I speak. So let's take a look at the live cattle spread. Um, we did settle not only below this important area, but also below that 3 point. I brought this to your attention today. Okay, this for Wednesday is at 3.300. Okay. And so, as I was saying, even a settlement above that is cause for concern. And we actually do want to settle below 2.775 in the coming days to continue the progress, that's the wrong word, continue the descent, if you will, which really hasn't occurred yet, down to the 187.5 area. So there's that. Closing above 355 even, not good for us. We bail. And even if we close above 330 even, that's probably a good enough sign, in my opinion, just to get out. But we could talk about that tomorrow. What else do we have? We're in the Canadian dollar. It should, yeah, what did I do here? It should perk up. Here's what I'm looking at. I'm just going to go to crude because I think that's really the cue here. And so what I'm going to do here is just show you, this is at, I believe 64.23, a very simple channel structure, which is right here. If we close above 64.23 on Wednesday, that looks good. Now, we also put out a bit of a reversal here today, as you can see. So I don't know what Canadian dollar is going to do. It's sort of like this heavy weight, this kind of like prove it crude oil before it even musters any sort of strength. Until then, it just feels so heavy. But anyway, this is a good development, I think. You've got a new move low following the high a week and a half ago, and we closed above, Monday's high. So we do need to settle above 62.23, and then we continue this upward progress where we could actually get into the 69 handle, perhaps by the end of next week. So there's crude. We're looking for that 64.23 settlement above, and I'll take a look at the Canadian dollar right now. It's holding its own. It did almost test. So here we go. I'm actually just going to take the stupid speed line away. Stupid speed line. 74.71 to 74.78. All right. That's our range of support that we want to see this market continue closing above for any hope to the upside. Hoping. Where this formation will be in the 76 handle next week, which coincides with that long-term series of channel tops in the weekly chart in the upper 76 handle that I've shown you. Now, for tomorrow and actually through the rest of the week, you've got, here's the move high. So I'm just going to follow. Yeah, okay. So this is our next real buy signal. We'd love to see this here. 75.31, wasn't that the high last week? Yes, 31.5. 75.31 is this short-term channel structure. Would love to see a settlement above this in the next few days. This would really help us out a lot. Then we would continue into the mid to upper 76 handle over the next several weeks. But until then, we're just kind of in this consolidated framework, as you can well see. And if we settle tomorrow below 74.71, let's just get the hell out of this call. Let's see here. While I'm in the currencies, I'll take a look around. Nothing going with the euro, Japanese yen, continuing south, but consolidating the last few days. I should do a better job of analyzing the yen and actually include the 24-hour market. I've been saying that for a few weeks. I'm sorry. Here's the British pound, week by week, doing nothing. 29.61 is our support, below which this market continues south into the later second quarter. Until then, it's stable to bullish. US dollar, what did it do today? Not much. Still same old song and dance here, weekly chart. upper 94, low 95 handle, long-term support, expecting the upper 99 handle over the next month, 2 or 3. Take a look at gold. Gold set in a sell signal here today, I believe. Absolutely. So I'm just going to take this off now. And we have this formation here at 1320 half. And we're out of this trade, of course. And for good reason at the time. We did watch the market rally. If we didn't get out down here, we probably would have up here, perhaps. I'm not sure. But in any event, this is what we're looking for. The 1260, 1262.4 is likely. I'm going to take this out as well. Take that out. Take this out. There's probably a channel structure now in here that is consistent with this channel structure. Yeah. And that's at 23 half. I'm just going to amend this. No, I'm not. I'm just going to make this 1323.5. That's our ceiling below which expecting this. Now, there is a case to be made for secondary selling pressures to emerge following a settlement below this speed line. This speed line is a 2/3 speed line. It's not just a trend line. So there will be a number of, funds, technicians, so forth and so on, indicating bearish continuation with a settlement below. And so, let's just keep that in mind. Let me just make sure that that is. Yes, that is the 2/3 speed line. This line intersects from this low through the 2/3 point, at which point in the time frame in which the high existed. So that's the definition. This is the 2/3 speed line. About the technical rule of thumb is if you violate the 2/3 speed line, you're going to revisit the low that the speed line was based off of. So, that would be quite a sell signal in itself, down into the 1190s if we close below 1261.2. I might as well label this. Wait a second. 1262.4. All right, that's enough. We're obviously below all these now. So that's what we have. I imagine silver sold off today as well. Not too badly. Plodding along. Copper has a mind of its own. It's hanging in there. It's not taking off like you would expect, but that is the emphasis. Upward continuation above 2.8414. Take a look at platinum. Haven't done so in a while. Last week we came close to testing this channel top, and now the emphasis is down. And I think we actually settled above this. We did barely a couple of weeks ago. All right, so this is what we're looking for. Anyway, that's a whole nother story. 10-year notes continuing to ease back. As I mentioned before, this is our base of support, above which this market can actually turn higher into the later second quarter. And if we close below it, the market continues south. This would be a series of failed longer-term buy signals. And I do think jumping on the short side of the 10-year note market would be the way to go, buying puts if we close this week below 122.11, 122.26 last. NASDAQ higher. Didn't ease back like the S&P did today. Still in a buy signal. Sugar eased back. So did cocoa today. Oh, wait a second now. God damn it. I don't know why CQG does this, but at certain times of the day after the close, it eliminates the day in question. Today we actually broke below this channel formation. And the last I looked, we were trading back above it. So it slipped below, is trading above it. I don't know. 23.35 half should be Wednesday's number. 23.35 rather. I don't know why I said half. Anyway, so we're going to look at uh, a couple of things. Okay, this is coffee. This is a weekly continuation chart, and I do believe this is July contract. I did check this out. So you've got, this is the lowest the market has been in years. Yes, last week was, okay? In years, going back to 2008, back to the 2011 high, okay? So there's that. Now, merely settling above the high of the low is a buy signal in itself on a weekly chart. That's 94.85. And you've got a descending channel structure that this week is at 94.68. So if we close above this area in coffee, I think it's worth going long. You know, I mean, how long? I don't know. At least up into this area. But this market could perk up nicely following such a settlement above this area. You know, it's one of those, it's not altogether different than what we had here. You know, right here, you know, it just kind of took off. I'm not saying it's bound to happen, but you know, you've got this, the same thing happened here back in September. You had a high, you had the lowest it had been in years. We settled a week above it, and the thing took off. So I would like to look for calls in July coffee. If you want to look into that, you know, and figure it out, that'd be fine. Be great. At the money call, 93, 94, whatever the case might be, and just hold it and see if we get something up into this area. You know, a nice little blast to the upside. But I came on here because we're looking at cotton. So cotton recovered nicely today. I'm going to go ahead and pull up a 30-minute chart of cotton. This is the July contract. This is all in a couple of days, you know. That was on the 12th. Yeah, that was that. This is Friday's high, 79.32. And this is last week's high of 79.57. That was like Tuesday of last week. And then we did all this morning. 9:45 this, no, yet Monday morning. And this is what's happened the last 2 days. So that gives you an idea of what it's done. And this is our support. So if we settle below this week, 75.71, this market continues south. Until then, where are you? There you are. 79.70 to 80.20. Now you have also inside that this long-term formation that this market has pivoted off of nicely over the last, I don't know, year. And so that's right in the middle of this range. But you've got a descending channel top at 79.70 and a former channel bottom at 80.20. This is our area. If we settle above 80.20 for sure, off we go. But holding below it, the market remains susceptible to weakness. Right now, we've got a low below last week's low, but we've come back and we're actually trading up on the week. In other words, above last week's settlement. This all over the course of 2 trading days. So it's been an active week so far in cotton. I don't know what all this means. It's worth watching closely. And then you and I have already talked about possibly buying puts if we get up in the 79.70 area. But quite honestly, if we do that late in the week, I'm not so crazy about it. You know, kind of like Wednesday's the only day I think I would do it, because as we get into Thursday, Friday, if we're trading above 79.31, which is last week's high, after having broken below last week's low, that's kind of an outside weak structure. And the market could then be setting up for a buy signal above 79.70 and secondarily above 80.20. So, you know, we could certainly buy puts in this vicinity and then just as quickly reverse by buying calls if we're wrong at the end of the week. We could do that. But either way, holding below it, I'm in favor of buying puts. Closing above it, calls in cotton, July cotton. All right, so I'm already 15 minutes into this. I think the rest of this, I'm just going to look at newsletters because they're usually better illustrated. And so I'm going to go into corn. Well, let's get into livestock. Oh, by the way, feeder cattle, I'm rolling on Thursday into the August contract. And I could pull this up right now. We did back off. Bear with me here. All right, so I'm sorry to sit here bumbling. I have to see if I did this correctly, because right now, feeder cattle. Yes, okay, I did this correctly. Sorry, 151.62. We backed off and closed below it in feeder cattle in May feeder cattle. So let's go FCAQ19 and see. And well, this all looks very. This looks all very different, doesn't it? August contract closed above a high, and this is a bullish market, as you're well aware, by virtue of that long-term speed line that we settled above a month ago. You're well aware of that. So bullish, broader market, and the May contract backed off below this formation of 151.62 yesterday. But the August contract, as you can see here, and I'm just looking at this freshly right now, is definitely in a bullish framework. None of this stuff is even valid. This is now. This is really what we're looking for. 163. This is interesting. Look at this. August is going to be reflected in the long-term charts very soon. And look what we have here, 163 handle resistance. Does that sound familiar? I think it does because, we've got that long-term target. This is the silly thing about the agricultural commodities, especially the livestock. We're going to hit this thing very soon. And then what? And then we've got this long-term channel structure if we settle above it in the lower 180s. So the lower 180s become a reality for the August contract as we continue into summer. So, yeah, but there's a case to be made for selling 163 handle resistance, not only on the weekly chart, but now the new August contract. And we settled yesterday above 159.82. We're continuing higher. It does certainly appear, yeah, all this stuff comes in together in the low 160s. Yeah, there's not much to add here. And I'm going to obviously be picking this apart tomorrow because Thursdays is the beginning of the August analysis. And I say that because, as you can see, you got August feeder cattle, 6,300 contracts today. It's definitely exceeded May, which was 5,500. So let's move on to, I'm just going to do August live cattle. August did settle above a number of levels. And I don't want to confuse everything here, but you've got this channel top at 119.27. You got this at 119.02, and I've opted for this at 118.82. Didn't I? Bear with me. I'm gonna jump to August live cattle because I actually went back and forth a few times today as to where is my breakout support for Wednesday. In other words, where do we buy? 118.82. So that's just the simple trend line here, giving the market room to back off. But truly, you can make a case that it's bullish above both of these formations as well. And 120.57. Come on, 120.57 is this mark. But 121.25 is really what we're now looking for, which is not much of a stretch, possibly within the week. There it is. Improperly illustrated. 121.25. Okay, that's what that formation is. That's what did essentially hold a month ago. 121.25. We could technically close above it today if we had a strong move. So I need to be careful with the amount of numbers that I'm putting up here. I should have more above 121.25. Anyway, so bullish right now. Bottom line here with with August live cattle above 118.82, expecting this level, 120, 125 over the coming days where we can top out on a monthly basis. And if we close above it, off we go. So there's that. And this market doesn't even turn bearish for the week until or unless, we can settle below this little formation here, which is at 117.35 today. And that's not going to happen. That would then indicate this 115.05 long-term support level. Bullish above 118.82 through the balance of the week, bearish below 117.35 over the same time horizon. All right, so that's the livestock. Sorry. Let's jump into May. Corn, we're not rolling into July just yet, but it will be happening in a couple days. Holding below 65 and a quarter, 47.5 in reach over the next several weeks. We got to get above 365 and a quarter. That's a really good buy signal into the lower 380s within several weeks. And the July contract isn't all that different. It's in 373 and change resistance. Holding below it, that 347.5 remains a 2 to 3 week downside target. Corn, we can watch Dees too. It's similar in that it's an outer contract, and I like buying above 390.5. That's been holding beautifully. It's a completely different structure here. It's a descending 1/3 speed line that's actually been holding well for the Dees contract. If we settle above it, it pivots us north into May. Until then, this 375 even, at least as of last weekend, was equivalent to 347.5 long-term support. Let's continue on. I covered crude, bean meal's weak. We're not really trading that, so I'm going to jump into May beans. May beans, if you take a look at their volume levels, they're getting close, but they're still a ways off. Yeah, 92,000 still in May, 67 only in soybeans. I am rolling to July. Wheat probably, that'll be the first roll as far as the grains go. You can see their volume levels are almost identical. But let's go ahead and take a look at the soybeans. They also sold off. They're bearish today below 890 and 3/4. This 875 half formation is likely over the coming days where we can bottom out through next week, possibly into May trade, which is about the same thing, I guess. And overall, holding below 905 even does allow this 857 half base of support over the next 3 to 5 weeks. We do need to get above 905 even. That is this is so classic. I'm waiting for the buy signal to urge you to buy it. And all along, the market's merely testing resistance. I think I kind of joked as much a week ago. As you're waiting for a buy signal to develop, it's testing resistance, and then in the process, you miss out on a nice little sell opportunity. But that's just the way it goes. Closing above 905 even pivots the market north to 939 and 3/4 over the coming weeks. And let me jump into wheat. I'll open that up, and there we are. We actually closed in a sell signal today for this contract. Get over here. There you are. There's the 851 and a half. Sorry, 451 and a half. That's a sell signal. We should now test this long-term support level at 432 even, possibly this week. Now, do we buy it again? Perhaps, but I am just, here we go again. This is so classic. Perhaps we buy it, but I'm really eager to sell it below if we close below it. So what does that mean? It probably means we're going to hold it to the tick and then rally, and then I won't have encouraged the buying of it. I'm just a little leery. I shouldn't even throw it out there. Just a little leery of buying it the next time down. But there's nothing to say we couldn't buy it and then reverse aggressively with a weekly settlement below 432 even. This should maintain a heavy dynamic through spring and into summer. We could really get hit hard into summer trade with this settlement. This would probably, in my opinion, well, I don't know. I was about to say this could coincide with a settlement in the corn market below 347 half. That long-term support level on page 2 of the May corn. I don't think so, though. The May contract right now in wheat is much closer to 432 even than the May contract in corn is to 347 half. But we could actually get a double sell signal, one in wheat and one in corn in the same week if we settle below those areas. And that would be a sign to go short both markets long term, which is to say we buy July at the very nearest and quite possibly September or December puts in either contract. Trying to think if there's anything else to cover. You know, the S&P, I'm going to pull up that chart here real quick. I already have it open. It's right here. Bear with me. I'm going to grab that. And so this is a formation. Where are we right now as we come into the close? 29.11 even. So, no, that's wrong. There it is. 28.94 and 3/4 channel bottom. We close below it. We could, over the next several weeks, break down into this area, which is long-term support, which is also this formation here at 28.15 half. But until then, S&Ps remain bullish above 94 and 3/4, and we should quite possibly over the next 3 to 5 days retest this 29.47 high, which has been a target for the last few weeks following the settlement a few weeks ago above this 28.15 half formation. And spreads. I knew I was missing something. Spreads. Take a look at the corn spread. All right, it backed off today. So we're still good above, this is 2.2. Tomorrow 2.2 is at 21.3 still. So we're still good above 21.3. And we still do need to get above 17.7 for this trade to look good. And then I think we could certainly add to it then. But until then, we just hold on with this, hold on to this one lot. If we close today below 20 even, then that 21.3 is likely the next day. There's no, I don't like these outer spreads. I don't know about you. You know, we can watch them, but they just don't seem all that fluid. I just don't like the way they look. Is that reason enough to disregard them? I don't know. But anyway, let me move on to other spreads. The wheat held this 14.1 and is now 3.7 today. And if we close below it, this market is setting up for 10.4 perhaps. Although there's some respectable levels on the way down, this is all very big picture. That's May, July. So probably not worth getting into. Only because May's just off the boards here momentarily. Dece March actually settled below these formations. Do we go short? Do we go short here? Do we play the short side now if we get another down day? I don't have an objection to that. I don't know where this thing would go. I mean, it's hard to determine the target. But this, bear with me. 17.0 still. These formations converge. We settled 17.2 yesterday below it. So that's bearish. The Dece March wheat spread. July Dece still is bearish below this area here, 23 even to 22.2. Let me update this. And this area is still, you know, 29.4. Not much of a difference, but that's really the target still in this particular spread. That's the July Dece, the most active, I'm sure, of all of them. Dece March looks bearish, as has July Dece for the last few days. May, July, we could probably just disregard that. Probably should disregard this. I'm actually going to, well, I'll leave it up. We can have a conversation about this tomorrow. But there's a month left, you know. I guess there's time. Soybeans, July Nove. Look at that. Came off of that 18.2 high, 18.2 high. The high settlement was 18.4. 18.0 is the actual line here. And this structure here is 16.2. This is our resistance, below which this spread can collapse back. I need to reconfigure this. I'm just following the low and taking the first high off of it and then grabbing that low. 21.5 now is sort of the base of the base. It's about as, you could pick other spots in the way down, but this is the downward pivot point that if settled below, this entire consolidative process is likely over and we continue south. So that's July Nove. This is Nove Jan sell signal, but no strong follow through right now. Let's move on to the live cattle. Come on now, there we are. Just as you said, we tested this area 332.5 to 340, same area actually. Now I'm just going to take this channel, even though it could contain daily lows at 375 and 380. I'm just going to get it out of the way so we can see that this market can continue south. That's the OCT-DC August October. After testing this support area, this channel formation last week, we can now, as I mentioned earlier, continue into this area which is approaching zero actually, and you have a low of a high at 150. So that's likely to happen, it appears. I don't know what that means for our spread. This is August October. DC Feb, man, tested resistance. Now this is all likely. These numbers are roughly the same. October DC, we've already looked at that. This is what we would expect if we settled above that 3.325, which is really around 2.6 now. All right, and finally, we'll just do the lean hogs. I don't think we were interested in the bean meal spread right now, from what I can tell. We tested this support. We bounced nicely. I'm going to get rid of this Fibonacci because it's irrelevant. And this speed line, I believe, is no longer relevant either because of that. Bear with me here. That's right. The speed line is down here now, so I'm just going to take that off. So this is our support, 7.3 now for the August-October spread. And if close below continues south, could be in a nasty way. Where's our next buy signal? I'll create that right now, I guess. And I'm just going to do an eyeball. I could do an exact mathematical computation, but right now I'm just, bear with me here. Sorry, Kevin. There it is. That's the next buy signal, really, is above 10.0. And that will change every time we put out a new low. There's August, October, June, Aug. Oh, look at that. Bloodbath today. Poof. So now, you know, we're looking for this. I don't know if we're interested in participating in any of this. But this is what we're looking for now with yesterday's collapse of this spread. Negative 6.175. And that's the June Aug. June Aug. Follow through on the recent sell signal in the spread today. October DC, looking for this base down here around 3.9. And that's the October DC. Here's the Aug OC as I showed you earlier. June Aug, June Aug, October Dece, August October, this formation. You know, you've got a low tick price here of 4.0. And oh man, we are 35 minutes into this. I just sort of digressed here. I think this would be, you know, oh wait, Jesus, what is that? That's this could be the target. You know, normally what I would do, and I'm not going to do it numerically right now, but I would look at a double channel extension, which would probably be down in here somewhere. But, you know, there's nothing to say that we couldn't get back to this low tick price. Anyway, there's that. That's all I'm going to say. 35 minutes in. Thanks for listening, and you and I will, I'm sure, talk in the morning. Thanks.